One financial analyst who spent 2 decades studying the markets agreed to a rare on-camera appearance to issue his biggest warning ever. He says the biggest market bubble in history is popping. So you can do nothing or take this one simple step to prepare now. This past winter, he began issuing a big warning about inflation and a looming market disaster. His timing was nearly perfect, but he promises you there's still time to act, to protect yourself, and potentially see some of the biggest gains of your life in the coming years in the right time-tested assets. Ones that tend to skyrocket in times of inflation, like hard assets, energy, and gold. He's put together a 5-stock model portfolio, a way to not just beat inflation, but benefit from it. This dead simple one-step investment approach could show you a series of triple-digit gains or higher starting right now. You could set yourself up in minutes and likely forget about inflation, rising prices, or the worst effects of a market crash for years to come. The critical thing is that you act now. Do your future self a huge favor and get the facts free of charge. To watch our full interview for free, simply go to inflationprotection2022.com. Again, that's inflationprotection2022.com to watch our full interview. Hi, this is Daniela Cambone, and welcome back to the Daniela Cambone Show here on Stansberry Research. Well, thanks to inflation, even your 4th of July backyard barbecue will be costing more this year. In keeping with tradition, most Americans, roughly 60%, plan to grill this weekend. However, with the cost of burgers, soda, and chips all on the rise, folks will be spending a lot more than they did last year. So here to talk about the summer of inflation with us is Rick Rule, founder of Rick Rule Investment Media, and just a fan favorite of the show. Always good to have Mr. Rick Rule on. Nice to see you, friend.
Nice to see you, Daniela. It's a pleasure being back on your program. By the way, I'm a huge fan.
Well, I'm glad you are. We are fans of yours. And I wanted to start by talking inflation, because since the, let's say, inflation situation broke out, you've been with us every step of the way. And since day one, you've said, look, the Fed doesn't have a choice here. They're doing the right thing. They're raising interest rates for as long as they can. But at one point, they will backtrack and almost chicken out of the tightening cycle. The reason I bring this up is because this week at the ECB meeting, Powell had some pretty strong words saying that the Fed is completely charged with not crashing the economy, fighting inflation. And to quote, he said, "We're strongly committed to using our tools to get inflation to come down. The way to do that is to slow down growth, ideally keeping it positive. Is there a risk that would go too far? Certainly there's a risk. I wouldn't agree that it's the biggest risk to the economy. The bigger mistake to make would be to fail to restore price stability." Rick, do you agree with his latest comments here, and what do you make of them?
I think that everything he says in a macro, so in the macro meaning, is true. I don't think that he or anybody else has the ability to fine-tune the economy to the extent that he would like to believe he does, or at least to the extent that he pretends to be able to. Understand that the circumstance that confronts us now, Daniela, was at least 20 years in the making. And it's not going to be 2 weeks in the fixing. You'll recall, or maybe you won't, you're probably too young, but many of your listeners will recall that when we decided to cure the inflation problem at the end of the 1970s, that the method that we used, which is to say very, very, very high interest rates, real interest rates, worked with regards to the inflation, but they wreaked real havoc with some individual voters, taxpayers, and savers. The recession that was engendered in 1982, 1983, 1984, and part of 1985 was truly one for the record books, with double-digit unemployment, lots of home foreclosures, things like that. That would work again if we had the courage to do it. The only thing that I have caution about, and I have a big caution, is that we had more tools available to us then, in the sense that government debt as a percentage of GDP was much, much, much lower. The ability that we have to stick handle the circumstance with federal government debt at 125% of GDP and a much, much, much higher reliance on government with regards to all aspects of the economy than we had then, makes me wonder if we have the tools available to us to combat inflation.
It sounds like you think we don't.
I'm not an economist. I am, in fact, a lender. I'm a credit analyst. To me, a healthy balance sheet and a healthy income statement are prerequisites for a healthy economy. And we have neither. On the one hand, between on-balance sheet and off-balance sheet liabilities at the federal level, we owe each other, that's a polite phrase, about $150 trillion. So the balance sheet's in lousy shape. As for the income statement, rather than having a positive income statement so that we can service the debt, the federal budget is in deficit $2 trillion a year. So rather than working on a $150 trillion debt, we're in fact increasing it. So you're right, Daniela. I have a very difficult time seeing an easy way out of this. Now, it does need to be pointed out, in fairness, that we have benefited from 40 years of decent economic growth,
Right.
Low inflation, and very, very, very low interest rates. What's happening now is karma, I guess. We are facing a reckoning that has to do with the fact that with quantitative easing, as an example, we forward shifted demand.
Right.
With excessive liquidity and very low interest rates, we disincented saving and we incented spending. And we got what we paid for. We have a circumstance now where there are excesses throughout the economy, and sadly, somehow, either policy or time, we're going to have to work this out. And I don't know how we get from here to there. I suspect we will get from here to there. We always have in the past. But I do not think it will be pretty. And I don't think it will be pretty in particular for people who forgot to save, people who forgot to invest, or people who forgot to equip themselves with the skill sets that will allow their incomes to keep pace with the inflation. And unfortunately, that's tens of millions of Americans.
You just gave me goosebumps by saying that, just the importance of just being prepared for moments exactly like this. Want to get back to your point that you made by saying this is 20 years in the making, right? It's not going to go away in 2 weeks. Should this not be the Fed's moment then, Rick, to undo the mess they did when they came out with, this is all transitory, to be more transparent and say, listen, folks, this is going to get really ugly?
I hate to be cynical,
Yeah.
Daniela, but I don't think that being honest is part of the political ethos. People don't want honesty, they want assistance. I would love it if we had a national dialogue that said that we have lived beyond our means for 40 years, and that we have to have 350 million individual resets, and while we're at it, we have to have a national reset. I assure you that if I ran for president on that platform, I would get maybe 10,000 votes and probably 30,000 death threats. The prescription that you offer up is the correct one, and as a consequence, it's highly, highly improbable. People get elected these days, unfortunately, by voicing other people's dissatisfaction efficiently. If you are a Democrat, you get elected by vilifying Republicans.
Mm-hmm.
If you're a Republican, you get elected by vilifying Democrats. Mm-hmm. Nobody gets elected by quoting that great political philosopher Pogo, who in his comic strip, said, "I have met the enemy, and he is us."
You're absolutely right. You're absolutely right. I never asked you this question, but a few experts in our circle, Rick, that we know, have come out saying that the CPI numbers, they don't even believe the CPI numbers we're being told. I bring this up because we're talking about the notion of truth here. Do you think that the numbers are being manipulated to prevent a confidence crisis?
Yes, I absolutely believe that the CPI stated rate of inflation understates inflation. Now, again, I'm not an economist, but I can tell you, Daniela, that wherever those people shop is not, in fact, where I shop. And you'll note, too, that when they discuss core inflation, they leave out in food and fuel. That's okay, but as you can tell, I like to eat, and I do drive. And the idea that my cost of living doesn't include food and fuel, if it's inconvenient, is a very odd thing. The oddest thing for me about the CPI number, which is allegedly a cost of living number, is that it doesn't include tax. Government is the largest expense in most earning households in the country. And the idea that you ignore the increasing bite on your wages and salary and savings that's presented by government is an absurdity. I guess if I didn't have to pay the tax, I might complain less about the index, but that's not on offer. So yes, I think using the CPI number to calculate inflation is a mistake. I use the CPI number myself because I'm too lazy to construct a different number. I don't know how to do it. And because if you use the CPI number, particularly relative to interest rates, the CPI number is high enough that if it doesn't evoke terror, it should.
Right, high enough. But if it were, let's say, if it is being kept down, where do you think it would be? Is it double, triple?
I actually don't know. I know that John Williams from Shadow Stats
Right.
Attempts to calculate inflation based on the calculation parameters that were used in the 1970s. I'm less familiar with his techniques, frankly, because in terms of making investment decisions, sometimes things that aren't true but are widely believed are in the near term more important than things that are true but are in fact intellectual anomalies. Whether the inflation number is 8.6 or 12.6, people need to understand that their savings and their investments are declining in purchasing power fairly rapidly, particularly when juxtaposed to the returns that they're getting on their savings.
Before we move on from inflation, I think there's an important life lesson that can be brought up here. And I know you and I have had multiple conversations on the sidelines of conferences on this. And I always really appreciate your insights. So when you talk about the importance of savings, especially for moments like this, right? After we've had such an incredible party, as you say, how do you find a balance of, okay, I've made a comfortable living, I want to enjoy life, but remembering that, stop looking at savings as boring, but as, a lifeline, as being vital. How do you find that balance?
Well, I went overboard when I was younger on the other side. I consistently saved, 35 or 40% of pre-tax income, which meant that after tax, I spent very, very, very little. The consequence of that is that although saving is an ingrained habit, any saving I do now is sort of silly from an economic point of view. But I suspect that the old financial advice about saving 10% of every paycheck, pre-tax, no matter what, so-called paying yourself first, before you have a Starbucks, before you buy a new pair of shoes, before you do anything, that you pay yourself first, that you take 10% out of the paycheck, you take 10% out of the interest receivable from your savings, everything. 10% of gross income pre-tax should be saved. And I think if people were able to do that, from a financial point of view, if they invested the proceeds reasonably prudently, that over 40 or 45 years, they'd come out okay. The second form of savings, Daniela, doesn't get the attention it should, which is to say, investing in yourself, developing your personal brand, developing your skill sets, learning how to create or further a product or service that is in demand, that generates enough utility for people that you will be needed in any economic circumstance. If you look at yourself, Daniela, you've invested in your own career. You've learned how to interview people like me. You have learned how to take complex topics and make them simple enough that people can understand them in half an hour. And the consequence of that is that inflation for you for the rest of your life will likely be something that's of academic interest, but won't threaten your family. I don't mean to make you blush, but that's a form of savings. Building your own expertise, building your skill set, understanding how to service your customer, irrespective of who the customer is probably a more important form of savings than saving 10% of every paycheck pre-tax. Remember that knowledge can't be stolen. It can only be lost. And building up the knowledge that's necessary to serve a market is probably the most important form of savings at all. Wow. And I'm delighted to say that I've spent 50 years learning how to do it.
You are the master, and I appreciate your comments. And I'm still learning every day. So, okay, moving on from the topic of inflation now, I wanted to speak about the 3-day meeting in Madrid that just wrapped for NATO, right? And I know there was a lot of tension on Finland and Sweden being invited, but for the first time, China was included in NATO's strategic concept adopted at the Bloc's summit, as I said, in Madrid this week. The document was last updated in 2010, and it lays out the security challenges facing the alliance while outlining a course of action, and now says China's ambitions and coercive policies challenge the allies' interests, security, and values. Beijing did not like this. What do you make of the fact, I mean, should we be reading into this? Is it a big deal that China for this first time is included in this NATO blueprint for you?
I do think it's a big deal, and I think it's a bad deal. I think that the world is better off when people talk to each other and trade with each other than when people fight with each other. I absolutely agree with NATO's statement, which is to say that the ascendancy of China threatens the interests of the NATO partners. A different question is, should it threaten the interest of the NATO partners? I don't want to get too much hate mail from your listeners, but I would like to point out that the U.S. defense budget by itself is bigger than its 9 largest competitors combined. The last time I looked, there were U.S. troops forward stationed in 70 countries. When you compare Chinese assertiveness with American assertiveness, what you find out is the Chinese have been very reticent about asserting their ambitions. That isn't to say that people shouldn't be threatened, particularly China's immediate neighbor, with the Chinese ascendancy. It's only that NATO is in many fashions the pot calling the kettle black.
I want to also talk to you about another headline since we last saw each other. A lot of countries now banning the import of Russian gold. Do you think this will have any impact on the gold market?
I think it'll have no impact whatsoever. One of the lovely things about gold is that it's very durable and it's very uniform. And there will be a number of countries that will not ban the import of Russian gold. So, as an example, Russian gold will go to India, and it will suddenly become Indian gold. And it will then reemerge in Dubai, and it'll become Arab gold. And from Dubai, it'll be sold to Americans, and it'll become American gold. With a commodity like gold that can be melted, refined, and recast, the idea that sanctions are going to work is the height of silliness. It will be an inconvenience to the Russians. The Russians might have to sell it, at least some of it, at some discount to spot. But I suggest that, as an example, removing Russia from the SWIFT banking system so that they can't sell materials in dollars, and making the ruble unconvertible means that gold will become an increasingly important method of payment between various countries, Russia included, that object to the extraterritorial nature of U.S. law. And I think that might impact the gold price. I don't think that banning the import of Russian gold will have any impact on the gold price, but the increasing utilization of gold as a medium of exchange between countries that object to the extraterritorial enforcement of U.S. regulations might be very important to gold. It might cause gold to be used as money again.
Well, I'm happy you brought that up, because if I read between the lines correctly, are you, Rick, suggesting that countries like Russia and China are preparing to exit the US dollar system and perhaps underreporting their gold reserves?
I think China may very well be underreporting its gold reserves. And I do believe, given that the Russians and Chinese don't trust each other, that each would prefer either a barter-based transaction, which is very efficient, or a gold-based transaction between the two of them. Certainly, if I were Chinese and the Russians prepared to pay me in rubles, which I couldn't convert, why would I want to receive that as payment? It's a floating abstraction, not even a friendly floating abstraction. If, by contrast, I could receive payment for my goods in oil, or in wheat, or in gold, that would be a much more efficient form of transaction. I need to say that if relations around the world begin to normalize, that the U.S. economy is the most liquid and the most transparent economy in the world. And while the Russians and the Chinese and the Indians don't trust us, they trust us more than they trust each other. I think if sanity returns to the world, that the U.S. dollar probably retains its primacy among currencies. But understand that I begin that statement with the word if.
If. Do you think then that we will, because there's a lot of talk about we're going to see a collapse of the current monetary system and we're going to see a new one emerge from this. I mean, do you agree with these type of statements that are circulating? Could you see that happening in our lifetime?
It depends on the time. Oh, in our lifetime, certainly not in my lifetime. I think that the current system that we have will have to bend to accommodate itself to the fact that the U.S., as an example, while still by far the world's dominant economic power, is a less important power than it was 20 years ago. So we're going to need to accommodate other cultures into the global financial system. As an example, a lot of people believe that China and or Russia are preparing to go on a gold standard. I think that's silly. I don't think that any politician in the world, American, Chinese, or Russian, wants to be constrained to keep their spending within the limits that are that are sort of designated by their gold holdings. I think you might see the Chinese or the Russians attempt to peg their currency to gold. But I don't, well, as an example, let's say, for instance, that the Russians owed you some money and their currency was pegged to gold. I'd love to see you try to collect. As a lender, I don't like confronting nuclear-armed debtors.
And if you don't mind just clarifying that, but from being pegged to being backed, there's no, like with the peg, there's no physical gold behind, every.
Correct.
Okay.
It's a promise. Rather than being an unstoried, unbacked currency, it's a storied, unbacked currency, just like the U.S. dollar was. The U.S. dollar was backed by gold until President Nixon decided it wasn't. When it became inconvenient to him, which is to say, when President de Gaulle said, your outgo is exceeding your income, we don't believe you can pay. We'd like to be paid in gold. Mr. Nixon said, too bad, so sad, we lied, strong letter to follow. And that is the response that you would get from every politician. Remember that the currency for politicians, what they live for, is power. And anything that restricts their power is a bad thing. And gold, having to back a currency with gold, having to live within the discipline of one's economy, having to live within one's means, is the most important detriment to power that exists in an economic sense.
Just want to get some quick thoughts from you. I know you don't talk the cryptocurrency world, but I just want to know, when you woke up to the headlines and see the crypto meltdown happening, what was going through Rick Rule's head? Was it, hey, thank God I'm not in this space. I feel bad for all the investors who lost tons of money. What were you thinking? Nothing? Something?
Pretty much nothing. You know, in the 70s, Daniela, I was a fairly successful young investor and businessman. And I thought that my competence extended to areas that I had no expertise in. I even financed movies. And I understood, come the end of the 70s, just how smart I was, which is to say, not very. The consequence of that is that I try to confine myself to businesses and investments that I understand very well, that I understand better than other people. I am still struggling somewhat successfully to understand distributed ledger and blockchain technology. But I didn't understand the value proposition around cryptos, with the exception of the network effect. And in terms of the network effect, they were so far behind dollars that they couldn't see dollars. The consequence of that was that I didn't know enough about cryptos to participate to any material extent. So when they went up in price, it was of interest to me the same way a circus might be. I wasn't on the trapeze. When they went down in price, the same circumstance. I was interested in the spectacle of a whole bunch of self-appointed gurus who knew nothing about crypto on the way up and knew nothing about crypto on the way down, expressing shock that they got punished for holding an asset that they didn't understand. By the way, I'm not saying that all of the people involved in cryptos didn't know what they were doing. I'm only saying that I didn't know, so I stayed out of the way in both directions.
Well, let's talk about the field that you do love and know and are a master in, natural resources. You have a conference centered around this coming up July 26th to 29th in Boca Raton. Just, an all-star roster of speakers. And I'm pretty sure uranium will be a big topic there, correct?
I think it will. Uranium, as we've discussed on your show before, is a commodity that I believe has to increase in price at a rate greater than the rate of inflation, because uranium has such utility in a world that's short electricity and long carbon. So we will definitely be talking about uranium, particularly now that the malaise in the uranium market is making investors uneasy. It's a wonderful time to talk about it.
Well, I also want, because I read back in June that the Biden administration is seeking $4.3 billion in funds to purchase enriched uranium and otherwise develop the U.S. uranium industry. And I never got your thoughts on that.
There's almost never anything good that comes out of the Capitol. All he really needs to do is get out of the way. There's a whole bunch of people that would love to sell us uranium. Including, by the way, the Russians. We don't want to buy it from them. But, the Australians have been pretty good allies. Every now and then, Daniela, we get some good things down here from Canada, yourself included.
Thank you.
The idea that we should spend $4 billion, whatever it is, assisting the U.S. uranium business, why don't you just get out of the way of the U.S. uranium business? You don't need to spend any money at all. You just need to get out of the way. For most of my life, when the government has decided that they're going to help me, it has hurt. And to the extent that they help me at the expense of taxpayers, I actually feel like I'm receiving stolen property. I feel dirty. So my hope is that Congress, in their wisdom, says, let's leave the $4.6 billion with the hardworking Americans who earned it, and let's let them buy electricity generated by whatever means from whatever source they feel is important. The idea that a cabal of big thinkers in Washington who have caused the inflation that we're facing now somehow can outthink 350 or 360 million Americans called a market seems extraordinarily unlikely to
Wouldn't
me.
that be nice? Wouldn't that be nice, if that could happen? But probably not, Rick. But
Probably not.
your conference is really like I said, you have Jim Rickards and Robert Friedland, a host of other big names at the show. I'm planning to be there as well, and it's happening at obviously a crucial time. And I want to just know from you as we're wrapping here, is this one of the most critical financial times you've experienced? Or is it?
I think it's one of the most promising times that I've experienced with regards to natural resources. I think the stage is really set both for natural resources and precious metals. And in that sense, the conference is timely. But the truth is that I've been putting on this conference either physically in Vancouver or virtually over the last 2 years from COVID for 30 years. And the conference has been useful to investors through thick and thin for a variety of reasons. In the first instance, as you suggest, we, like Stansbury, have very big, very good gurus. The Jim Rickards, the Daniela DiMartino Booths, the Nomi Prinzes, the Grant Williams, people who put the big picture in a perspective that you won't get from CNBC or, for that matter, from the Wall Street Journal, which is important. Of equal importance, though, we have world-class analysts, people who say, depending on your set of beliefs, here are strategies at the micro level that you can use to employ the macro and defend and protect your wealth. Yeah. Most importantly of all, for 30 years, I've had a part of the show called The Living Legends, where we introduce investors to entrepreneurs who have built multi-billion-dollar companies in natural resources from scratch. And it isn't to let them brag, but rather to have them discuss the lessons that they learned building multi-billion-dollar companies and how those lessons made them better investors and how the lessons they learned can make you a better investor too. Probably the most important part of the educational function
Absolutely.
of the conference is where the rubber meets the road.
Absolutely.
But there's two other things. Exhibitors at our conference. An exhibitor at most conferences is regarded as advertising. And the qualification to be an exhibitor is simply that they're check cashes. That isn't so at our conference. To be an exhibitor at our conference, we have to know you well enough that we own your stock in Sprott or Rule managed accounts. Now, sadly, that doesn't mean that every stock I ever bought went up. What it does mean, however, is that these exhibitors are all vetted. We know them well enough that our own capital is at risk. And the fifth thing, probably the most important, is that every investment product I have ever, not investment product, pardon me, investor education product that I have originated in the last 30 years, I have sold with an absolute 100% ironclad money-back guarantee. Any of your listeners, any attendee who comes to the Boca Raton Natural Resources Investment Symposium and doesn't believe that he or she got their money's worth can get a full refund. No questions asked. In 30 years, the products that we have offered up to investors have generated enough utility that we have had to refund less than 1/10% of the tuitions that we've charged over 30 years. But make no mistake, the financial risk is mine.
Well, I like I said, happening July 26th, 29th in Boca Raton, Florida. It's one of the best conferences out there, and I wish you a lot of success with it, Rick. And I also just want to thank you again for another highly informative and entertaining talk with me. So I always appreciate when you come on.
Well, we need to do it more frequently.
We do.
I've enjoyed appearing with you live. I've enjoyed appearing with you in recordings. I'm going to really enjoy taking you on the boat cruise.
There we go.
Boca Raton
wait.
Symposium Your listeners should know it's a chance to have a drink on Rick with Daniela and Rick.
I look
There you
forward to
go.
that.
Rick, I want to wish you a happy July 4th weekend to all our Canadian and American viewers. Happy Canada Day. Happy Independence Day. Hope your barbecue is not as expensive as we're thinking here. And be sure to stay tuned to Stansberry Research. We'll have much more great content coming your way. Thank you, Rick.
Thank you, Daniela.
And thank you all for watching. That's it for me.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.